This short video is aimed at anyone who's starting out contracting, consulting or freelancing. My name is Nigel Simmons. I'm a qualified accountant and owner of Acconomy. We're a firm of chartered certified accountants and specialise in providing advice and accounting services to contractors and freelancers. We're accredited by the Professional Contractors Group and regularly contribute to the PCG seminars and roadshows. If you're about to start contracting or freelancing, there are a number of things that you need to get to grips with. After winning your first contract, the second most important decision is how you're going to trade with your client, be they an agency or the client themselves. The options available to you are as follows. 1. To trade as a sole trader. 2. To sign up with a UK umbrella company. 3. To form a limited company of your own. And 4. To sign up with a tax strategy. As a firm of chartered certified accountants, our job is to advise which option is best in each particular circumstance. All of the options have advantages and drawbacks, and the aim of this short video is to go through each of the above and briefly highlight the pros and cons. Starting with the sole trader. In many ways this is the most attractive option. The advantages are that it's easy to start and easy to stop. All that you need to do to start is to notify HMRC that you're self-employed. The consequence of this is that you'll be asked to complete a personal tax return and account for tax on your business profits. You'll also have to pay Class 2 national insurance contributions, currently charged at £2.50 a week, and in addition to income tax, you'll pay Class 4 national insurance contributions, currently payable at 9% of profits over and above £7,225 per annum, with a reduced rate of 2% payable on profits above £42,475. For many contractors this would be an attractive option. However, there is one major drawback. Most clients and agencies won't engage you as a sole trader, as it opens them up to the risk of you being classified as one of their own employees by HMRC, and with this comes the responsibility of payment of the employer's national insurance contribution. It's important to understand the issues surrounding your employment status and the IR35 legislation. This is a topic in itself, which we will cover later on in the video. The second option that I mentioned in the way that you can trade with your client is through a UK umbrella company. This is the simplest option of all. You effectively become an employee of the umbrella company for tax purposes. You submit your hours and expenses to the umbrella company and they do everything else for you. If you're only anticipating a short spell in contracting between permanent jobs, or your daily rate is low, then this could be the best option, as you can sign on and off at any time. The disadvantage of the UK umbrella company solution is that the tax that you pay can be very high indeed. The reason for this is that tax and national insurance is deducted from your pay as if you were both employer and employee. This means that most of your income will be subject to tax, at either 20% or 40%, employer's national insurance at 13.8% and employee's national insurance at 12%, a total tax deduction of 45.8% on most of your income. The third option is to trade through your own limited company. The advantage of the limited company approach is that if you're not affected by the IR35 legislation, once again there's more on this later on, then this offers a very tax efficient way of conducting your business. By structuring the company and remuneration correctly, it is possible to restrict the tax deducted to around 20%, at least up to £40,000. For higher income earners, the top slice of your income, up to £150,000, will be taxed at 45.5%, although there are ways to mitigate the amount of higher rate tax depending on your circumstances. The disadvantage of the limited company approach are as follows. First of all, it's a more formalised arrangement and doesn't lend itself to dipping in and out of freelancing. It's important that for each contract that the contract is both outside the IR35 legislation contractually and that the way that you work is also consistent with the contract, otherwise IR35 could still apply. Thirdly, there is always a possibility that HMRC could open an inquiry into the applicability of IR35. The fourth option you have is to adopt a tax strategy that is provided by one of a number of providers. Potentially this will provide the highest net pay for high earners or for those for whom IR35 is a problem. Such strategies are numerous and varied and have attracted significant negative press in the contractor community, often for very good reason. There have been some bad schemes and dubious sales tactics used, often from unregulated offshore companies. As professionals, we consider it part of our duty to make clients and potential clients aware of any such schemes that we believe could be beneficial to our clients, but in doing so we would always point out the risks as well as the rewards. Arguably, the risks are more quantifiable with a carefully chosen tax strategy than taking a chance with IR35. So those are the four options. Let's now turn to which one gives the most take-home pay, a question that we are more often than not asked by potential clients. Clearly, take-home pay will be dependent on a number of factors and assumptions, so the following is really only a guide. Based on a daily rate of £550 and assuming that you work for 90% of the available days in a given year, then the take-home pay under a UK umbrella arrangement would be around about 48% of your gross income. Through a limited company, you could take home approximately 70% of your gross income, an increase of around £27,000 after tax over the umbrella arrangement, and under a tax strategy you could take around about 82%, a further increase of approximately £16,500. I would stress that this is an example only, and we welcome anyone to call us, and we're quite happy to give an illustration of what your take-home pay would be in your particular circumstances without any obligation. But with this in mind, it's worth looking at the IR35 legislation itself and seeing the implications of its application. As a contractor or freelancer, it's vitally important to gain an understanding of this legislation and how it works. Fundamentally, IR35 is about employment status in the context of service companies, i.e., is the limited company you are offering your services through really a business, or are you actually a disguised employee of the client? Employment status isn't a matter of choice, as some people believe, it's a matter of fact. So why is it so important? It's important, vitally important, because the answer to the employment status question will determine how much national insurance is paid and by who. As the current rate of employers and employees' national insurance together is 25.8% of income, it can be very significant indeed. What is particularly vicious about IR35 is that the risk is borne entirely by you, the contractor or freelancer, and not by the end client or agency. As you will have seen from the earlier take-home pay comparison, the financial implication is very significant. So you may ask, why don't I trade as a sole trader? As a sole trader, businesses are not covered by IR35. That's correct. If you trade as a sole trader, then IR35 cannot apply to you. In this situation, if HMRC determine that you are a de facto employee of the client, then they, the client, not you, will be liable for the associated national insurance payments. So far, so good. The problem is that clients recognise this and are highly unlikely to offer a position in a self-employed capacity, as it would mean that they would bear the risk. Hence, they will invariably insist that you trade through a company, shifting the risk to you under IR35, or trade through an umbrella arrangement where you effectively volunteer to pay both employees and employers national insurance. So naturally the question is, how can I ensure that if I trade through a limited company, the legislation, the IR35 legislation, doesn't apply to me? There are two sides to satisfying the employment status question in your favour. Number one, ensure that your contract with the client or agency doesn't look like an employment contract and is a proper contract for services. But be warned, not all agencies are savvy about the IR35 legislation, so don't take it for granted that the contract you're given is a good one. Number two, assume that your contract is IR35 friendly, then it's important that your way of working reflects the contract. It's no good having a great contract if it's a sham. So what makes a good contract? Well, ironically, a lot of things that you would like a contract to say from a commercial perspective are unhelpful when it comes to avoiding IR35. A good example would be a long notice period. This may be desirable from a commercial perspective, but would be seen as indicative of employment by the courts. One of the real problems with employment status is that it's not defined by statute. It's not black and white. Instead, what constitutes being an employee has been determined by case law over a long period of time. And over that time, three central tests of employment status have been developed by the courts. The first test is the ability of you to provide a substitute to do the work in your place. The second test is the degree to which control is exercised over how the work is carried out. And the third test is the extent to which there is mutuality of obligation between the worker and the client, i.e. if the client is bound to provide the worker with work and the worker is bound to accept the work that is offered, then that infers a strong mutuality of obligation, and this points to employment. It follows then that in order to demonstrate that IR35 doesn't apply, the contractor needs to be able to demonstrate 1. The ability to provide a substitute to carry out the work in their place, 2. That they are their own master, they are not subject to immediate control in how they carry out the work, and 3. That there is no mutuality of obligation, i.e. if there is no work they don't get paid, and they can refuse work if they don't want to undertake it. Typically, all contracts will address these issues to some extent. The real test is whether, when taken as a whole, the contract points towards employment or self-employment. We would recommend that all contracts are reviewed prior to work commencing and any changes made to help avoid being cast as an employee. As I've already said, not only does the contract need to be drafted properly, but also the actual situation on the ground needs to reflect the contract. As Chartered Certified Accountants and accredited members of the PCG, we are ideally placed to answer all your questions regarding starting and contracting. I personally will be happy to have a no-obligation phone conversation with you if you have any questions or would like to clarify any aspects of your starting in the contracting world. You can call me, Nigel Simmons, on 0330 100 0720. That's 0330 100 0720. That's a free phone number, even if you're calling for a mobile. I do wish you every success with your new venture.